Welcome to TradeHacking.com's market recap for September 29th, 2015. News that moved the markets today. Federal Reserve policymakers have said they will likely raise interest rates before the end of the year. They announced that their actions will be unpredictable. Some investors see a rate increase as a vote of confidence in the U.S. economy, while others think it will be a mistake to raise borrowing costs just as the global economy shows signs of improving. Concerns that China's economy is slowing more rapidly than previous thought have also hurt the stock market. Investors are also preoccupied with the outlook for China, as their progress may affect U.S. interest rates. Goldman Sachs led money centers down yet for another day. Take a look at this chart where the stock has lost over 21% in the last 3 months. Each decline from the peak coincides with the Federal Reserve not raising interest rates at their meeting, leaving banks on their own without ways to make major profits. On Tuesday, the Nasdaq Biotechnology Index edged down 0.6%, its 8th straight day of losses. The index has slumped 27% from its peak in July. This puts us in a bear market. Biotechnology stocks have been a weak spot for the stock market recently. The sector has slumped on concerns that lawmakers will seek to implement new regulations to curb price hikes amongst the industry. The price of oil rose on expectations that the Energy Department will report a slowdown in U.S. crude production when it releases its monthly petroleum supply report Wednesday. The gains for the overall market were small. Stocks flirted between modest gains and losses for most of the day before closing slightly higher. A rebound in healthcare sector helped steady stocks on Tuesday, pushing the S&P 500 index to its first gain in 6 days. The markets remain close to its lows for the year and is set to close out September with its worst quarterly performance in 4 years. The Dow Jones Industrial Average closed up today 47.24 points. The S&P gained just a little over 2 points at 1884.09. The overall Nasdaq Composite lost 26.65 points to close at 4517.32. The Russell 2000 index of small mid-cap stocks closed at 1083.91, which was down 6.66 points for the day. The Nasdaq 100, which is tech and biotech heavy, closed at 4083.37, which was down 20.10 for the day. Commodity and interest rate prices were also mixed today, with West Texas Intermediate crude oil November contract closing at $45.19, which was up 76 cents per barrel. December gold closed at $1127.60, which was down $4.10, while silver was up 7 cents in December 2015 contracts, which closed at $14.61. Copper closed at $2.26, which was up a penny, and the 10-year bond lost a little bit more on the interest rate side as bond prices went up. The 10-year bond closed at 2.054%, which was a loss of 0.041% in yield. Our market outlook continues to be the same, which we believe that selling pressure in the long term will continue. We're still going to revisit the lows of October 2014 and see if we can hold those. We got our first bear signal in January of 2015 and a confirmation in the May-June time frame, so we believe we're in a bear market, not a correction. We try and sell into the market strength, so when we get a very strong update, we would be selling short, or we would be buying puts or selling spreads. And then look to sell option premiums into this higher volatility environment. You can get some really good opportunities to make some good credits on your spreads. I personally like diagonal spreads. And to learn more about diagonal spreads, you can go to our website, TradeHacking.com. That's the market recap for September 29th, 2015. Have a great night, traders.